Hi guys, welcome to CA Inter Financial Management. I'm Anuj Jalota. Welcome to the MCQs of Financial Management. On every Saturday, Sunday, we are coming out with CA Inter costing lectures completely free for everybody. Ensure to check them out. Additionally, every MCQ of costing is already there on our YouTube channel. If you have friends in CA Final, do tell them. Complete MCQs, whether from module or from BOS portal, are there on our YouTube channel. And more than 80% of India students are only watching these lectures and going for their examinations, and most of them clear in the first attempt. So do spread this, and now we are on to our third mission of CA Inter Financial Management. Let's see the question for today. The question for today is, assume cash outflow equals to 1,20,000, followed by cash inflows of rupees 25,000 per year for 8 years and a cost of capital of 11%. What is the NPV? NPV is net present value. Okay, so you're going to be spending 1,20,000 today. Okay, that is going to be your investment or outflow, and you're going to be getting 25,000 rupees for 8 years, and your discounting factor or COC is 11%. They're asking you what is going to be NPV. Might be the simplest question. So there are 4 options. This is the first one, this is the second one, this is the third one, this is the fourth one. Obviously, pick up your pen and paper, start to be calculating. If you all have tables, then your job might become slightly simpler. Okay, so comment the correct answer, please. Now, time for me to be doing that. Now, NPV is present value of inflows less present value of outflows. Present value of inflows. Present value of inflows, 25,000 each and every year. Multiply that thing by discounting factor at the rate of 11% for 8 years. Okay, so your cumulative discounting factor, okay, present value, okay, of rupee 1 invested for 8 years, or in my language we call that thing as a cumulative discounting factor. Okay, so let's try to be seeing the numbers over here. So calculation of NPV, PV of inflows, 25,000 multiplied by, please check up your discounting factor tables or your calculator, or 5.146 in any case will be your cumulative discounting factor at the rate of 11% for 8 years. You multiply, this will be your present value of inflows less present value of outflows, that is 1,20,000, and finally your NPV will be 8650. So the closest I think that I can get to that is part C of the answer. Okay, part C, your answer will be 8653. So that is your correct answer. Please do remember, in examination, maximum chances are there that those guys are going to be asking you questions on NPV only. And in NPV, you should be knowing all the various adjustments, like what happens if there is depreciation, what happens if there is SLM method, what happens if there is, say, WDV method. Apart from that, how do you find out cash inflows for every year? Sales minus variable cost minus cash fixed cost minus depreciation, that gives you the PBT. Then you try to be finding out PAT, then you add back the depreciation because it is a non-cash expense, and then you try to be arriving at cash inflows. Apart from that, the questions like you have to be selecting whether to be purchasing machine A or machine B. Those are like quite common type of questions. And then there will be questions like you all have 2 businesses. Okay, you either can be doing, say, business A or business B, which are mutually exclusive projects. You got to be selecting one of them. Then which project should be selected? All such kind of questions. NPV is most widely used method. Might be this question does not do the justice to the level of knowledge that is expected from us by ICAI. But then I think so in our classwork, we will have done far heavier questions. I'll see you next time with another question. Till then, take care, guys. Bye.